Hey everyone, welcome back to Upside Down Data. This is a quick update about the current state of the UDPI risk indicators for Bitcoin and the 24 alts that we're currently monitoring. So if you guys like the content, subscribe to the channel, turn on your notifications, give the video a like, and follow us on Twitter at Upside Down Data. We put out regular updates there about our risk indicators and more. What I want to start here with is a nod to the broader context because the Federal Reserve made a highly anticipated announcement today about interest rates, which for now are being kept very low, as they've been since the beginning of the pandemic in March 2020, at about 0.25%, but they're likely to be increased soon. We've known that since December, but that was reaffirmed today that in March, most likely, we're going to start to see interest rates rising. The significance of that is that it's bad news for risk assets like crypto and equities. The low interest rates that we've been enjoying for the last couple of years have contributed to the bull market that we've been in. And so this is something that we've been anticipating and watching, and it's the talk of the town. There have been other notable events today and more coming tomorrow. Tesla announced its earnings today, which were okay, but slightly below hopes, if not expectations. Tomorrow we have Apple's earnings coming in. These are both very important stocks on the NASDAQ, and that's going to set the mood as well, in addition to what the Fed has come out with today. That's the Federal Open Market Committee, FOMC, if you've seen that acronym floating around. So the reason that I'm starting with this is because when we look at the risk indicators, we have to understand that the broader macro context, the economy, and monetary policy are setting the tone here. And risk when the macro is bullish means one thing, but risk when the macro is bearish means another thing. And we have to kind of adjust our interpretation of the risk indicators accordingly. And so now I'm going to pull up the risk information with this in mind. That is, with the expectation that these kind of golden years of low interest rates and this kind of unmitigated bull market that we've been seeing are tapering. They're coming down, right? So with that said, let's take a look here. What I have up is the Bitcoin upside downside potential risk indicators for the long, medium, and short term. So we monitor this risk indicator for 3 time frames. The long term is meant to be interpreted on a scale of months, the medium term on a scale of weeks to months, and the short term on a scale of days to weeks. And there are no major changes here since the last update. We're still seeing Bitcoin just below -3, which is quite a low risk level based on history. What I mean by that is that previous times when Bitcoin's UDPI risk has been at -3, in the long term, it's turned out to be a very good buying opportunity. I think that's likely to be the case here too. But the short term could be a very different story, and maybe even the medium term. There could be pain to come. We really don't know what's going to happen. But we know that the conditions in the economy and in monetary policy are not as favorable as they once were. And so what that means is that low UDPI values, low risk values, are more sustainable now than they would be during a clear bullish period. When everything is bullish, a low reading on the risk chart indicates a great opportunity. When things are bearish, a low reading on the risk chart indicates an opportunity for an investor who doesn't have much of a time preference, meaning you have to be willing to wait as long as it takes, and we don't know how long it will take, in order to realize the gains, this upside potential that we're seeing on the long-term risk chart for Bitcoin. The medium term and the short term tell a similar story. They're not quite as extended to the downside, which means that they're relatively low risk, but not as low risk as from a long-term perspective, I mean. And again, given the uncertainty in the economy and the reasons to have a bearish outlook from the macro perspective, it's entirely possible that the medium and short-term risk could continue lower. So again, that adjustment that I want to make is to recognize that low risk values are more sustainable when the broader context is bearish. And conversely, high risk values are more sustainable when the broader context is bullish. So we always need to be reading this information with that in mind. Let's look at the altcoins. Here are the 24 alts on the long-term time perspective. We see a lot of alts that are in very low risk territory relative to their historical price action. I mean, Kusama is setting new lows in terms of its risk. We also see many, many others that are doing something similar. I mean, DOT is very close down there. Helium below -3 H bar. We have a number that are below -2. We see Litecoin well below -4. And then we have Solana, Theta, VeChain, XRP. These are all quite low risk from a historical standpoint. So again, what this indicates is that for an investor with a low time preference, someone who is willing to wait for however long it might be needed to wait in order to realize this upside potential, then these are probably good accumulation zones. But that does not by any means mean that they can't go lower, and they could go much lower. And so it depends on your time preference. So as an investor, be thinking about what your time preference is. Do you care a lot about being able to cash out by a certain date? Or are you content to wait for as long as you'll need to wait for this upside potential to be realized? There is definitely plenty of upside potential here. And I think that in the long term, at some point, we'll look back at these prices and see them as very favorable. It's just that we don't know what's going to happen between now and then. There are no readings here that are especially high risk, really, from a long-term perspective. And so, there's no added reason to be especially bearish on any specific assets, right? I mean, there are some that are above the midpoint, like Atom and Phantom, Luna, but not by a great deal. In a vacuum, we wouldn't consider those to be very high risk. And so that's not an additional concern, I don't think. When we look at the shorter term timeframes, which I'm about to pull up, the story changes a little bit about those high risk assets. And so here's medium term. And in this case, we see that there are still plenty of very low risk assets in the sense that there's a lot of upside potential. When I use low risk, I mean a lot of upside potential. It does not mean that there's no chance of them going lower. There is. But we also see at the medium term that there are some assets that, in addition to the concerns about the macro economy and about the monetary policy and its implications for risk assets, in addition to that, we also see that there are some assets that on their own terms, based on their own historical price action, are a bit overextended. I mean, Atom is in the red zone, not super high into the red zone, but a 2.64 is relatively high. Phantom, a 2.11. And so I think if you combine those risk readings with the context, then there is reason to be cautious. There's reason to be cautious across the market, but there's certainly reason to be cautious with these assets. As I said, when the broader context is bearish, high risk readings are less sustainable, right? And low risk readings are more sustainable. And so in a bullish context, we would be less concerned about this than we are. So be careful with these assets, and be careful in general, but in particular when you see these high risk readings against this kind of uncertain backdrop. Let's look at the short term too, just for an added piece of information here to round out the picture. We see a lot of similarities here. In general, there are many readings that are less extreme, but there are still some that are very extreme. In the short term, DOT and Kusama are maxing out their downside potential, which means that they have an enormous amount of upside potential. They've already realized a lot of downside potential. But again, it all depends on the broader context. On the other hand, unlike the medium term, we don't see really any assets that are, based on their historical price action, very high risk. So whereas Atom was at a 2.64 in the medium term, on the short term, it's below 1. So there's a piece of good news, or at least something to take the edge off. There's no reason that Atom couldn't bounce if the conditions are right for it. And same with Phantom. So this is just an overview, and also want to put everything in context and remind you guys that the right way to interpret these risk indicators is with what you know about the economy and about the economic policy, monetary policy, and everything else that's going on. So just something to keep in mind. Hope you guys found this useful. Thanks for watching.